So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to the Daily Call from Option Alpha.
Hey everyone, this is Kirk here again from Option Alpha, and welcome back to the Daily Call. Today we're going to talk about why 98% of investors suffer from nearsightedness. Now, why 98%? Honestly, I have no idea. It could have been 99, but it looks better than 97% or better than 99%, being overly assumptive that just 1% do not suffer from nearsightedness. But the reality is, I think that most investors suffer from nearsightedness, which is a very common thing. And it gets back to this idea of recency bias, which I believe we talked about in show 196 or 197 on the daily podcast here. But what investors do, and I see this in particular with traders all the time, is they get into a position or a series of trades, and that small grouping of trades that they get into, it could be as small as one, it could be 3 or 5 trades. They assume that because those trades did well or did bad, that the rest of their trading is going to follow suit. So it's this recency bias that the last occurrence or the last series of occurrences are therefore going to dictate any future performance of a trade or trading system that they're using. But that's just not the case. In fact, many times when people email me and they say, Kirk, I have 10 trades on and I've won 10 out of 10, I'll shoot an email back to them and say, look, you're probably obviously winning at a much higher rate than you would in the future. So just keep that in mind. Or if somebody says, Kirk, I've made 10 trades, but only 2 of them have been winners. Okay, well, you're probably not trading enough yet. And that's a low probability win rate based on how you're trading. And so you're going to win more in the future. You just have to keep trading. But it's this idea that a lot of people just have such nearsightedness and don't take the moment or the extra time it's required to step back from the system that they're using and really analyze the long-term numbers. What does this look like if I were to trade it 100, 200, 300 times? How much better would I do in the future if I shaved, my allocations a little bit and cut risk? Those are the questions that really you should be asking if you want to be a serious investor and a serious trader, because you're not going to know everything you're going to know about a system in the first 10 or 20 or 50 trades. And to look at those trades and then base all of your assumptions off of that is where you suffer from nearsightedness. You don't have the foresight to look beyond just the first couple trades that you're making. So hopefully this helps out. As always, if you have any questions, let me know. And until next time, happy trading.
Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.